This forces the Fed to do the unthinkable. Now, a lot of things that the Fed has been doing, well, over the last few months, but really over the last few years, have all been sort of unthinkable by me. I think many, garage analysts like myself on YouTube have known what the effects, what the results of all this Fed policy would be. Of course, they continue to tell us that, we didn't account for these unintended consequences. We didn't anticipate the supply chain shortages and all these things, which is funny to say because they have, hundreds of PhDs working for them, thousands of researchers working for them, and yet people all across Twitter and YouTube knew exactly what would happen. But nevertheless, here we are. They've done the unthinkable, and they're continually being pushed further and further to make tougher and tougher choices. And I think they're in a position now that could be a big, big deal. Let's take a look at this. So as you can see on my screen right here, it says central banks rush to quell an inflation crisis that they helped to create. Finally, somebody gets it right. Bloomberg gets it right. They created it. The Fed created it. The Austrian economist's viewpoint is that inflation is an increase of the money supply. They created way too much money, and all of that money creates all unintended consequences, including creating more money chasing the same amount or less goods and services, which of course puts prices up. Then all that money that went out to people made people want to quit their jobs and trade stocks on Robinhood and trade cryptocurrencies. We had less people working. That meant supply chains backing down. All that new money bought more goods and services. We were importing more than 20% more goods than we had previously. So then all that additional demand broke the supply chains down even more. And you start to see how all of this money created all these unintended consequences that they didn't think through, but yet were pretty easy to understand. Now, of course, you throw in all these crazy regulations for gas and for energy, for solar, natural gas, and then, you sprinkle a little bit of a Russia-Ukraine conflict on that, and of course, you have a recipe for prices going through the roof. As I say, an inflation crisis. So let's take a look at this here. It says central banks across the globe are speeding up interest rate hikes, seeking to crush an inflation surge partly of their own making. Like I said, I love that. Finally, Bloomberg's calling it out like it is. It says here, Canada's central bank hike a greater than expected full percentage point following 2 half-point moves. So what happens is as the dollar continues to get stronger and stronger and stronger, all of the other currencies of the world are forced to react. So either they can continue to lose pace, they can continue to get weaker and weaker and weaker, and money will just flow out of those currencies and back into the dollar, or more than likely what they have to do is they also have to increase rates on their own. When they don't, we can already see the effects of those in many of the smaller emerging markets. So Ecuador, Peru, Lebanon, of course, Sri Lanka is the poster child for this. And so we can already see this. So these other countries all have to react. So Canada here, they hiked a greater than expected full percentage point as these really smart economists want to say 100 basis points or 1 point. We can see South Korea raised by a half point after several quarter point moves. New Zealand increased by a half point for a third straight meeting. In the U.S., another searing inflation report led to bets that the Federal Reserve would hike by a full point later this month. And that's the unthinkable. So the Fed really wants to forecast way out in advance of what they're going to be doing. In November of last year, 2021, they said that they were going to start raising rates. They'd start doing quantitative tightening. They laid out this dot plot of when they thought all these would happen. And they tell the market well in advance what's going to happen so everybody can start being prepared. They don't want to catch anybody off guard here. But they are realizing faster and faster that they have no control, or I should say, they think they've lost control. I say they have no control from the beginning. And they all of a sudden are now forced to react behind the 8 ball, if you will. So what do I mean by that? So at the last FOMC meeting, they were projected to raise by 50 basis points or half of a point. But when the meeting came out, it was actually 0.75, 3/4 of a point. So that was pretty interesting because the Fed hadn't forecast that. They didn't think they were going to do that. But the inflation numbers, the CPI inflation numbers were so high, they were forced to come out even hotter than expected. Now, just this week, just today, the new CPI numbers came out at a scorching 9.1. Now, I've been saying 9 for a while. We've been at 8.6. I like to round up. But here we are over 9. We're at 9.1, which still is completely false. We're still probably closer to 20% if we calculate it correctly. However, we're at 9.1, but that's causing the Fed to, like I said, do the unthinkable. What do I mean by that? So we've seen the stock market kind of slumped off a little bit, Bitcoin, cryptocurrencies as well, because they realize that the Fed's going to have to become much more aggressive than they had wanted to be. They wanted to give us, they wanted to tell us what they were going to do. They wanted to stick to their plan, but their plan is falling apart really, really fast. It says here that the Bank of England may deliver a 50 basis point shift in it at its next meeting, double the previous pace. So the Bank of England, just like all the other banks, they're being forced to act. Now, this is really bad for the Bank of England because they're in a very, very serious situation, but they have no choice. They can continue to keep rates low, which in that case, they'll continue to see inflation rage high, and all the liquidity will drain out of Europe back over to the United States, or they can try a little bit of raising rates, which is not really going to happen for them. We can see here more than 30 central banks have hiked rates by a full percentage point or more in one sitting in 2022. So those are pretty aggressive rate hikes to go at 1 point at a time. I mean, we've been in a 0-point policy world. So when you're at 0%, to go from 0 to 1, that's a 100% increase. Or to go from 1 to 2, even though the numbers are still small, it's a 100% increase. We can see here, Fed Chair Jerome Powell made clear last month that failing to get inflation under control, he said, would be a bigger mistake than overdoing the monetary tightening. So he says, let's see. So we already shot way too high on the upside. We were trying to get to 2%, but we ended up at 9. And if we don't get it under control, that's way worse than if we make a mistake and overdo it to the other side. So we want to get back to 2. What if we get to -2? What if we get negative GDP growth? What if we get monetary contractions? He said, that's actually a better problem to have than inflation continuing to rage high. Now, I don't know if that's the case. I think if the economy is still cranking and you're making money and you have a job and everything's good, you could probably absorb the price increases. But if the entire economy is crashed, the entire economy is sacrificed in order to get inflation down, great. So prices aren't going up as fast anymore, but now nobody has any money to buy anything. So what good is that going to do? You have to also keep in mind that if inflation stops going up, say they get it from 9.1 now back to 8.5, back to 7.5, back to 6.5, that doesn't mean prices are coming back down. Doesn't mean your cost of living goes up. Doesn't mean things get cheaper for you. It just means that prices stop going up as fast. We can see here in a world where many central banks are picking up the pace, meaning they're raising their rates faster and faster, those that lag behind are getting punished by weaker exchange rates. That's what I'm talking about. And that only worsens inflation. It makes imports costlier, so now the cost of goods go up because your currency is getting so weak. It says here, the European Central Bank has yet to start boosting its benchmark rate, and the euro on Wednesday slid below 1 per dollar for the first time since 2002. Now, since the first time since 2002, the euro only came out in 2002. So since its existence, we can say it, that's a more accurate way to say it, a little bit more dramatic way. It said an ECB spokesperson said the central bank is attentive to the impact of the exchange rate on inflation. Now, Japan, they're refusing to go along with the trend. They don't want to go along with it. They said they can get away from it. But I love what this quote says here. In the end, monetary policy makers will get prices under control. That won't happen soon enough to save households from a major blow to their budgets or central banks from a major blow to their credibility. So even if they get prices under control by destroying the entire economy, even if, it's not going to save households. So, okay, they got prices under control, but they destroyed the economy. You, as a household, your cost of living went up or your quality of life went down. Central banks, a blow to their credibility. They can't control this thing. All they can do is make the problem worse. All they can do is shift the problem around from one place to another. And we can see here, this is the unthinkable we're talking about, that the U.S. inflation quickens to 9.1%, mostly reflected in higher gasoline, shelter, and food costs. Like the most important things, the things that you can't live without, food and energy. I guess that's fine if you're electronics and your Netflix subscription and that new jacket that you want to went up in value, but food, shelter, and energy, those are the things that we really need. We can see that, of course, they don't know what they're talking about. Economists projected a 1% rise for May and an 8.8% year-over-year increase. They thought it would be 8.8. This was the fourth straight month that the headline annual figure topped estimates. Who are these people doing these estimates, and why would we listen to them when they clearly don't know? Jerome Powell from the Federal Reserve came out last time and said that, we found out how little we actually know. Well, I could have told you that. It's the fourth straight month that they've missed their estimates. They have no idea what they're doing yet. Here they are controlling the biggest economy in the world. Now, just to show you the unthinkable, let's take a look at this. This is the U.S. dot clock right here. So what we can see here is that the U.S. national debt is about $31 trillion. So what are they doing? They have to raise the rates by 1%. That's the unthinkable. Why is it unthinkable? Because, one, they're raising rates way faster than they want to or what they've projected. They don't want to do that. That causes big problems. Two, that's a huge jump, and we're coming off of 0%. To jump up at 1% jumps at a time, that's going to have massive disruptions to the market. But looking at this debt clock here, we have almost $31 trillion of debt. If we get up to just 3% on the Fed funds rate, that puts the interest, just the interest only, on the debt at over $1 trillion per year, which is about 30% of the income that the federal government receives, which of course they run a deficit. They don't have the money to pay the bills anyway. But watch for this. The Fed has no control. We know that because they've missed every single estimate the last 4 months in a row. They weren't able to get to 2% in 2018, 2019, 2020. When they finally got to 2%, they overshot it to 9%. And now they think they can get it back down to 2% without destroying your entire life and the country. But I don't know. What do I know? I'm not a Fed economist. I'm just a guy on YouTube. But you can let me know what you think down below, because I'd love to hear your opinion on that. Of course, as always, give me a thumbs up on this video if you like it. And if you don't, that's okay. Give me a thumbs down. At least leave me a comment. Tell me why. While you're at it, wait. While you're at it, hit that subscribe button. Thanks for that. All right. Until next time, to your success. I'm out.